Happy Friday, traders. It's 8:01 a.m. Chicago time on the 14th of February, 2020. This is episode number 1693 as we tiptoe to the 1700th episode. That's a lot of episodes. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market sentiment's mixed this morning. Crude leading the pack again. With another rise of 1%. Crude is up 52 cents, trading at 51.94 after pushing higher yesterday. Um, the bonds are up 22 ticks. Gold is up $4.50. The Treasury notes, the 10-year notes are up 9 full ticks, and the DAX is up 26.5 points. The S&P is only up a point and a half. It tends to fall off very quickly. It is a mixed market this morning. The cable lagging, trading at $1.30.25, and the dollar index futures down 4 cents. Pretty mixed up this morning. Okay, so that's where we stand. Again, mixed sentiment. In terms of what's ahead of us, we did get some key figures overnight. German GDP came in weaker than expected, both the Q on Q and year on year. Came in at 0.4 versus 0.5 expected. The Eurozone GDP came in almost in line, 0.1 Q on Q, and 0.9 versus 1% year on year. U.S. retail sales came in for the last month at 0.3 in line, and we have a couple of potential market movers here. The Michigan consumer sentiment, Michigan consumer sentiment prelim is coming out at 10 o'clock Eastern, 9 Central, expecting 99.1. This can and has moved the markets. We also get business inventories expecting 0.1%. And that pretty much wraps up the week. It is Friday. Happy Friday, everyone. Just pay attention to the fact that we're heading into the weekend after some pretty bad news yesterday that the market just could not care about. I saw a meme today that was interesting. It says, red alert, the CDC is studying the S&P 500 for immune antibodies to the coronavirus because it's definitely not responding to that news in a negative way. Anyway, let's dive right into our review segment. Yesterday, the primary scenario is expected to be responsive, get back into the range, and trade sideways into the 75, 76 area. I expected the market to be responsive. The market has been responsive when gapping down in range pretty much every time. And that was a high probability play. Otherwise, expect the market to reject the prior day's range and then push down into 60.50. If we get 60.50 taken care of, then we're looking for 52.53 next. The third scenario is a drive up through the range and out the other side. Scenario 3 was the winner yesterday, although 2 looked pretty good. So actually, let me pull the trigger chart. Better view of what was going on. Turn these off. So sorry about that. So here's the market responding, just as expected. Respond back into the low, fall back off. So now we're thinking scenario 2. Okay, and we're looking for a continuation down, break through 60.50 and then 53, right? That was scenario 2. And then it pulls into the middle, and you can see this very clear zipper, which tells us what? It tells us that the market is likely to push strong one way or the other. Zippers our consolidations, our balance. One side or the other is likely to be wrong. And of course, as you see here, it pushed that way, right? So now scenario 2 is out. Scenario 1 or 3 are in. Okay, scenario 1 brings us back into balance. And so scenario 1 it is. Very tough to get in on this trade here, given the swing back down. And then later on in the session, it continues on to a new all-time high at 84.75 and then falls back to the middle from there. So scenario 1 really, although it did cross the other side. So what we had yesterday is a market that tested from below of the prior day's range to above the prior day's range and finished in the middle. And it, even though it did that, it was not a neutral day. Yesterday was a normal variation day with the point of control outside of the initial balance high. So a bullish kind of sentiment overnight session. Let's take a look at that. Overnight session opens back up, pulls back to the closing swing low right here, and then pushes right through the high, consolidating. Yes, the overnight session had okay volume, elevated volume with a pretty balanced profile. Looks incomplete to the upside. I would expect it to extend out, bounce out, but it's holding beneath the overnight point of control. It's holding on top of mid and VWAP, but it's still also holding on top of the yesterday's IB and is not extending down on what is pretty bullish delta, The overnight inventory is mostly long. And so overall, the sentiment, as boring as this sounds, oh my God, every day I'm coming in and saying the same thing. As boring as it sounds, the bias is long. So we are coming into the weekend. It's Valentine's Day. Not that that makes a difference, but we're coming into the weekend, and who knows what news is going to pop out of China this weekend. So who knows? It's likely to. Who knows how the market's going to balance out into the close, just to hedge out. But overall, I am not very optimistic on the quality of the trade that's in front of us today. So I don't have access to, on this particular PC, I don't have access to Bookmap. It's there's something going on there. So I'm going to show you very briefly what the latest order flow looks like. Uh, this is a volume scope chart on IRT. It's also called a footprint. It's also called the price something, price ladder, price chart, something like that on Sierra and others. And what we see here is a market that popped higher, pretty good volume, closing out at the top, consolidating, drifting back down to the full session mid. Full session VWAP is this pink, and then it makes an attempt again. Okay, delta, lower delta than earlier, and then it spills its beans right here, and you can see that this bar, this particular bar here, finished on the low. The order flow is showing some developing strong sentiment to the downside. So the way you play this, the setup that I talked about on Anthony Crudeli's show. Tell him he was mentioned in today's Trader Bite. He'll like that on trading with Anthony Crudeli. Last time I talked about the impulse pullback to mid continuation trade, and that's what's setting up. That's a classic setup for me. That's what's setting up right now. So here we go. It's pulling up. We have a higher high, higher low on this one tick by 8 point and figure chart. That's how I'm showing my my volume scope chart, my footprint, my number bars, whatever you want to call them. higher low, higher high with a negative delta this against the predefined area. This is a short targeting the most recent low here at 76, looking for a continuation lower. That's as good as it gets for today in terms of order flow. Again, I don't have access to Bookmap on this particular PC. There's something going on with the config file or something. So I'll get them to sort that out. I'll switch gears here and look at what's expected for today. But I forgot last Friday that it was Friday. I was getting ready to travel. I want you to take a moment, if you would, and hit the like button. Find it on your YouTube channel, and please click on it. If you're on Convergence website watching this, please hit the YouTube button at the bottom right. Go to YouTube and hit the like button. I'd appreciate it. Let's take a look at what we're expecting for today. Today, again, likely to be pretty boring. Let's extend this balance profile forward, and we see that the balance point is at 75.50. That's the most traded price in this region. The expectation this morning, open auction and range. Open auction and range, expecting this to push lower, take out the overnight low, balance out, look for buyers, impulse back up, push the high, and then consolidate into the close. Not expecting it to push very far above 84. Remember, 84.75 actually on the nose was the key key stock zone that scenario. Let me show you it. This was yesterday. See this? Oh, it's 83.75. That was the key target for scenario 3. And we went to 84.75. Not too bad, I guess. Not as accurate as I remembered, but so that area I expect to tangle up. The secondary is an open that squeezes the shorts on that drop that I just showed. Push into 84.75, push a little bit higher, impulse down, hold yesterday's range, test as far down as this 70 area and consolidate. I expect today to be mostly a rest day. I'm not expecting a trend day. Yesterday was quite a performance to come in from below and check all the way higher. So those are the two key scenarios. I mean, there's always a trend scenario, but I tell you what, we haven't dipped here to entice new buyers. Any push higher is likely to be a grind, in my opinion. It's likely to be a fairly quiet day today, barring any news, and that's I want to temper expectations here. That's what's expected. Now remember, if you're trading without a plan, and especially if you're trading without some sort of, let's say you come in here and you want to gamble, because trading without a plan has about as much of an edge as a gamble. And trading is not gambling. Don't make me get into a fist fight with you. The idea here is to come in with a risk plan, so at least you can be here tomorrow. Okay, so if you're not trading with a risk plan, then you're just asking to lose your money, and that's okay because you'll be funding those people who did the actual homework. So at a minimum, you should have some sort of a risk plan that says, look, I'm risking X amount or X size stop for each trade that I see. And for the day, this is my budget for today. This is my budget for the week before I have to stop. Please take the time to do that. I want to leave you with a joke that is somewhat has something to do with averages. You know how we use moving averages a lot. Maybe I'll leave you with this one on Friday because I feel like it. I finished early. This is what's called a mean joke. Three people, a physicist, an engineer, and a statistician are out in the woods hunting for deer. The physicist spots a deer, adjusts his scope for elevation, bullet velocity, gravitational pull, and all that, takes the shot, misses the deer by 5 feet to the left. The engineer laughs at him and he says, see, physicists don't operate in the real world. You forgot to compensate for wind. So the engineer grabs the rifle, adjusts the scope, adjusts for wind, takes the shot, and misses that same deer by 5 feet to the right. Immediately, the statistician bursts into happiness and he says, we got it. We got the deer. Get it? If you don't get it, ask me on Twitter. I think it's a funny joke. Anyway, I figured I'd throw that joke out there to finish off the week. Good luck, everyone. I'll catch you on Monday. Take care.